Hi there, welcome to Kneppy Invests. Never thought I'd be doing a video on the company I'll be featuring today, and that is Alliance Airlines. Airlines itself are very hard businesses to run. We've seen numerous bankruptcies, not only in Australia but overseas, of airlines over the past few decades, increasing competition, decreasing ticket prices, not a lot of tailwinds behind companies within the airline industry. So when you do find a company, and this company has grown significantly over a 5-year period, you do have to take the management team and this company a little bit more seriously. And that's where I came to when I looked at Alliance Airlines a little bit more deeply than I've done in the past. So I focused on their financial year 21 results and then went back in time to see how the company has been doing over the past 10 years. And this company has done an absolutely stellar job during the past 5 years. So I have to really applaud the management of this team, including the CEO, Lee Schofield. So let's get into it and look at their financial year 21 results and why I'm becoming more impressed with this company. Alliance Airlines was formed in 2002, and I think originally they were fly in, fly out. But over the past few years, they've taken on more capacity for other airlines, including Qantas. And if Lee Schofield is right, I watched an interview with him that he made in June. They're taking on capacity for 9 other airlines as well. He's also mentioned in that interview other things they are doing, which look really interesting. Like they're taking customers up to down to Kangaroo Island, to Winton, sort of these one-day trips where they fly customers to one place and then fly them back later in the day. And that's really something that does pique my interest, that they have a management team that is thinking of new ways to drum up business. And there are many reasons to like this company, and one of the reasons is the management team. And it seems like Qantas have the same opinion. Qantas is actually the largest shareholder of Alliance Airlines. They have less than a 20% stake. There is that potential that eventually, maybe, Qantas could take over Alliance in the future. That's going to become harder and harder because the valuation of Alliance Airlines is increasing. It has been increasing at a really good clip over the past 5 years, going from 60 million to 667 million right now at a share price of $4.18. And all you have to do is compare the financial year 21 results of Alliance Airlines to Qantas and Air New Zealand, who both released their results on August the 26th. Just compare the results of all 3 companies, and maybe that can be your homework over the weekend. You can just see how much better Alliance Airlines have been doing over the past year compared to the other 2 companies. Now, in saying that, Alliance Airlines is mainly, if not wholly, domestic. Well, the other 2 companies also have international flights, and they've been significantly affected. So maybe that's the reason why Alliance Airlines have done a stellar job over the past year. Revenue of $309 million, and we're going to see that significantly increase over the next few years. I'll talk about why in a few slides. Operating cash flow positive, $40 million, and profit after tax, $33.7 million. Now, one of the things that did pique my interest, maybe for negative reasons or positive, was they did spend $205.7 million on capital expenditure. And that's the main question I had looking at the results of this company on first looking, because I saw that number in their cash flow statement and I wanted to answer the question, why did they spend so much money on capital expenditure? Is that a normal thing for this company to do? First thing I always go to when I see a financial report released is the statement of cash flows, or the cash flow statement. Then I work my way backwards, go to the balance sheet, profit and loss statement, and then go towards the front of the financial report and read any commentary from the chairman and the CEO. Then I'll do other things as well, which I won't mention here. And the first thing I always look at is receipts. I like to see revenue growing through time. Receipts and revenue are fairly similar, but they're not identical. So you do want to see an upwards trend in both receipts and revenue over the long term, not over just a 2-year period, which is what is shown in most financial reports. Operating cash flow was down $4 million. That's the next thing I look for. Now, just because it's down isn't negative, because again, you do have to look at the trend through time. But the first thing that really did stand out for me is that massive increase in capital expenditure from $31 million to $206 million. I do have a few guesses of what they've done when I first saw this. The first guess was that you can break down capital expenditure into maintenance and growth. And more than likely, that $30.8 million in 2020 was mostly for maintenance. There was no growth initiatives there. And so if maintenance, or $30.8 million in maintenance, is sort of a normal for this company, more than likely they spent that extra $170 million on growth initiatives like buying extra aircraft. And we can see if they did buy extra aircraft later or in other parts of their financial report. So we'll look at that later in this video. So that's the main thing I have here, is questioning why there was a significant increase in capital expenditure. The second question I do have is, how did they fund that capital expenditure? They borrowed $100 million. So that's half of that capital expenditure. They also used cash. So the cash decreased by $62 million. And they used some cash flow from their operations. I always like to see management teams of companies use the cash they did create in operations and use that for growth initiatives. And it seems like that's what Alliance Airlines have done right here with their capital expenditure. To find out what they spent their capital expenditure on, we can go to the balance sheet, and I'm looking here for two things: inventory and property, plant and equipment. They increased the inventory by $30 million. So more than likely that's going to be spare parts, that sort of thing. And we can confirm that by going to note D1. But property, plant and equipment increased from $217 million to $407 million. That's almost a double increase in spending on property, plant and equipment. And we can go to D2 to see where the extra spending was in, and we can confirm they did buy aircraft just by looking at this and looking at the aircraft assets. At the end of 2020, aircraft assets were at $213 million. Now it's $390 million, and they bought $218 million worth of aircrafts. And all you have to do is a little bit more extra research to see what aircraft they have bought, and they've just increased the supply of aircraft they have in their inventory. The next two slides I'll show you are straight from one of the presentations. And one of the reasons I wanted to show you this slide is because I love what Alliance Airlines have done here. They've broken their capital expenditure up into maintenance and growth. I wish all companies did this, because there is a significant difference between how a company spends their capital expenditure. If there's no growth, or they're spending no money for growth, then that's actually a negative. And I have heard some professionals, when they don't get this information, they just assume it's 50-50. So 50% of capital expenditure is for maintenance and 50% of capital expenditure is for growth. And when we look at the financial year 21 numbers, this is not 50-50 for Alliance. They spent $35.7 million on maintenance, which is the above table here, and then $189 million on growth expenditure. So that's definitely not 50-50. They've also got a forecast for 22, and once they're looking at 22, it's becoming more in line with that 50-50, but not quite 50-50. Maintenance expected for financial year 22 at $46 million, and for growth, $62 million. I really like what Alliance Airlines have done here, and I just wish more companies would do this, breaking down their capital expenditure into maintenance and for growth. Now to another slide in their presentation that did actually answer some of my questions. So they did purchase 32 E190s, and the majority of those aircraft are not in service just yet. So we don't have the financial performance of this company with these new aircraft in service. And over the next few quarters, so over the next 2 or 3 quarters, we're going to see the majority of these aircraft come into service. And by quarter 4, financial year 22, the amount of total extra flight hours these new aircraft are going to generate is going to be significant. We've got 80,000, and compare that to before they had these aircraft. This Alliance Airlines was only generating 37,620 hours of total flight hours. So we're going to see a significant increase in the hours this company will be flying with these extra 32 E190s they have in service. And that means there is potential for significant growth in this company over the next few years, and it's going to last into 5 or 10 years. Onto the historical financial performance of Alliance Airlines. This is something I really like to look at to see how a company has been performing over the past 10 years. Broken this down into half-year increments, looking at revenue, cash flow from operations, and capital expenditure. You can really break down the performance of Alliance Airlines into two parts. The first part is from 2012 to around 2016, when revenue was falling at a consistent rate. In fact, it fell from 115 million to 89 million in 2016. And we also saw cash flow from operations fall during that same period. But from that low point in 2016, when they only had $89.72 million of revenue, we've seen their revenue consistently climb. In fact, it's climbed from 89.7 million to 153.9 million. We've also seen cash flow from operations increase as well. When you look at the capital expenditure, it's been fairly low over the past 7 or 8 years until the last 2.5 years, where they spent money on purchasing these E190s, and that's why we've seen a bit of a spike. And more than likely, because they've already said this, that the capital expenditure over the next few years will become significantly lower because they've already spent the money on the E190s. So 2 things to take away from this is, even though this company has performed quite steadily over the past 5 years, it's not always been the case. This company was under stress for a period of time from 2012 and 2016. You'll definitely be able to see that when we look at the market cap and the share price performance of this company. It can be broken down into those 2 periods. Another thing I like to do is to look at the revenue, operating cash flow, and profit growth rates and compare that to the market cap. I want to know why the valuation of a company has increased or decreased through time. Has it been because of financial expansion or multiple expansion, or a combination of the 2? And when you see the market cap growth rate or the valuation growth rate larger than the profit and operating cash flow growth rate, that means there's a bit of multiple expansion going on. That means the PE ratio is increasing. Ideally, what should be happening is operating cash flow and profit should be growing at very similar rates than the market cap growth rate. I did the very similar thing with Amazon, and they almost grow at identical rates. That is the operating cash flow, profit, and market cap. So that's showing me, when you look at a company like Amazon, there's no premium or discount in the share price. You're buying the company based off the growth rate in their financials. So right here with Alliance Airlines, revenue over the past 10 years has been growing at 6% per year, operating cash flow growing at 5.2% per year, and profit growing at 6.2% per year. If the market was viewing Alliance Airlines in the same light it was back in 2012, the growth in the market cap or the value of this company should be growing at about 6% per year, but it's been growing at 14.5%. That means the market is pricing more of a premium into Alliance Airlines right now than what it was doing back in 2012. And that does make a little bit of sense, because the financial improvements in this company over the past 5 years has been impressive, and the company has bought more aircraft, and the market more than likely is expecting the financial performance of this company to accelerate over the next few years. And that potentially is a reason why the value of this company has increased at a greater rate than the financial state of the company has over the past 10 years. And if we break that down even further into those 2 periods of time when Alliance Airlines was not performing, and then compare it to when it was performing. In between 2012 and 2016, the valuation of this company dropped from 195 million to 61 million. That was a decrease per year of 25% in the value of this company. So during that period of time, the market wanted more of a discount to buy into this company, which makes sense, because there would have been a lot of participants in the market who thought this company was under stress because revenue was dropping, profit was dropping as well. So even though operating cash flow was remaining stagnant around 25 million, there would have been some people who were concerned about the viability of this company. But management of Alliance Airlines turned things around in 2016. And from 2016 to 2021, we've seen significant growth in revenue, operating cash flow, and profit. In fact, profit has grown at 20% per year over the past 6 years from 13.5 million to 33.7 million. And the market's been impressed with this turnaround in Alliance Airlines. You can just see that with the market cap of this company increasing from 60.5 million to over 660 million. That's a 61% increase in the market cap per year. And if you just compare that growth rate in market cap to the profit and operating cash flow over the last 6 years, it's significantly higher. So the market is willing to pay more of a premium for this company right now compared to what it was in 2016. And that makes sense because there would have been still some negativity around this company back then because of the performance of Alliance Airlines the previous 5 years. But right now, there's more proof the management of this company has turned things around. They're more willing to pay a premium for this company, and they are expecting the financial state of this company to improve over the next 5 years. So there is a chance, particularly if the market is right, we're going to see operating cash flow and profits actually accelerate from here on in. And that makes sense because this company has more aircraft it can use in service. Now on to the charts for Alliance Airlines, and the first chart I'm going to show you is the monthly chart. There will be some investors who use the monthly chart and downtrends and uptrends to find positions to take in companies. And I've just included a downtrend here, a sloping black line that signifies the downtrend this company's share price was in between 2012 and the middle of 2016. Its share price fell from $2.20 to a low of about 40 cents in 2015. And then for about an 18-month period, all the way during 2015 and the first half of 2016, Alliance Airlines share price was trading in a range between 40 and 60 cents. So the share price was consolidating. That's very important. And then when that downtrend was broken in the middle of 2016, which coincided with the increasing performance, financial performance of this company, that's when the downtrend was broken, and the share price has been increasing ever since then. It's gone from a share price of 50 cents when the downtrend was broken to a current share price of around $4.20. We'd see a bit of a dip during the COVID-19 financial panic when the share price of Alliance Airlines fell briefly to a share price of around $1. But overall, the share price has been in an uptrend for the last 6 years and looks no sign of it breaking anytime soon. As we turn our attention to the daily chart for Alliance, going back to just pre-COVID-19 financial panic, when the share price fell to just below $1 for a very brief period of time, for a 4-day period, looks like it was just near $1. And then just like a lot of other companies on the ASX, there was a V-shaped recovery. And in fact, the share price of Alliance got above its pre-COVID levels in May, June, and just has kept on going up. A well-defined uptrend. Share price keeps on rising. A little bit more noise in a daily chart. So some people will ignore daily charts and use weekly or monthly charts to get rid of that noise. And there is signs, when you look at the daily chart, there is potential change or shift in sentiment since they released their financial year 21 results. Just by looking at the moving averages, looking at the share price dipping lower, it's gone lower than the most previous 3 lows. So there is a lower low. And we have seen a little bit of a recovery in the past 4 trading days. That could be just a bit of a bounce because the volume has really dried off. So there is a potential shift in short-term sentiment when it comes to Alliance Airlines. So if you are thinking about buying into this company, you would keep that in mind right now. So the way I'd look at this is if you are a long-term investor, you're impressed with how this company has been performing, and you think there is long-term potential for Alliance Airlines over the next 5 years because of this purchase of these 32 aircraft, maybe now is a good time to buy. If you're a short-term investor with a potential new short-term downtrend developing right now in the past few weeks, maybe now is not the right time to buy because of this potential of the share price dipping a little bit further over the next few months. That's all I have for this video, this financial year 21 results video for Alliance Airlines. If you do have any questions about this company or any other company on the ASX, please leave your thoughts, your opinions, any questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.